YouTubers, Mike Martin's here, Mike Martin's channel. Thanks for watching. Housing crisis here. I'm gonna try my best to be on tonight for trends in the housing market with open lines. If you guys want to call in, I'm gonna try my best to get some people on. Anyways, I got this one here. Really good article was sent to me last night while I was in bed, but it's good. Vancouver's tough real estate markets just got a little tougher. Do you guys remember when I kept saying after Q1 in 2018, after Q1 numbers come in, you're going to start to see differences? I hope they could publish true results. I know a lot of the real estate companies lie about numbers. They lie through their teeth. I really hope the Q1 numbers for 2018 are honest and straightforward. I really hope Better Dwelling could weigh in on this too. I hope Better Dwelling's listening to this and they could weigh in on what's going to happen with the first quarter numbers, because I'm feeling something that's going to be big. And let's look and see what this article says. Wow, look at that. It has 504 shares. Usually it's get 3 shares when it comes to housing. But I guess people are starting to take notice of what's happening around them, eh? Some home buyers might have to reconsider what they can afford in Vancouver as of January 1st. Vancouver as of January 1st. New mortgage lending rules issued in 2017 by Canada's banking regulators set a new qualifying rate for uninsured mortgages. Those with at least 20% down payment on the home price. Well, if you're watching this in Nashville, Tennessee, the average home is about $200,000. You could probably afford 20%. But the average house in Vancouver is $1.4 to $2 million bucks. So 20% is kind of hard to come by. Anyways, home buyers who have qualified for a mortgage of a rate of 2.9%, for example, will now have to prove they can absorb the rate hike of 2 percentage points or a 5-year average rate posted by the Bank of Canada, whichever is higher. So you got to keep that in mind. They're going to raise the rates even more. So basically, 2.9% on $100,000. That's about $3,000 a year more, $3,500 a year in finance charges. Your house is $1 million bucks. You're looking at $35,000 a year in finance charges. A tougher new rules on mortgage lending are aimed at protecting lenders and borrowers. The federal government wants to make sure borrowers can afford a potential rate hike. Okay, why wasn't this put in place since the time of Jesus? You know why? Do you know why this wasn't put in place to protect the customers? It's because they're not out there to protect customers. The banks are not there to protect you. And you know what it is? And why this hasn't been in law since the time of Jesus? I'll tell you why, people. It's because the banks really don't have the money. They create money out of debt. And when they create money out of debt, your enslaved labor pays it back at interest rates. And the bank really has nothing to lose in reality when the debt is created out of thin air. Watch a lot of those banking videos. You can watch how banks work and how fractional reserve lending works. Watch those videos and get kind of introduced to what's going on with the whole banking system. Anyways, okay. If you're looking to qualify for a standard that has a higher interest rate, that means that for the same income, you're going to be able to borrow less because obviously your total debt service ratio will change. I'm wondering, one thing I've been wondering, guys, for the longest time, is when they're going to start adding the average cost of food into total debt service ratio. You have a family of 5, you could afford this much, but wait a minute, when they do your TDS and they do your debt, when they service your debt and they look through your gaps on file and they look at inquiries to see if you're not credit seeking and stuff, they start looking at stuff like, you know, all the different credit cards. They add it all up with your mortgage and your insurance and your home taxes, property taxes. Sorry, guys, I'm just out of it today. But anyways, they add that up, but they never include food, cell phone bill, and all these other little hidden bills. I know people that pay $200-300 a month for cell phone bills. And what I'm saying to you guys is that they need to start including food. They need to have a system saying, okay, you have a family of 3, that's automatically to your TDS, we're adding $300 a month towards food, even though $300 a month buys nothing. You have a family of 6, okay, we're going to have to add an extra $800 a month for food. We have to add that to your TDS and see how much you really could afford for a house, right? Some will be hit harder than others. Vancouver real estate agent Chris Ryan says the new rules will hit some local buyers harder than others. People who were looking at homes at 2.5s now are going to be coming down to closer 1.9s. And so everyone is going to jump down a bit, Ryan said. Well, it is to protect people, right? Where that leads to, it's hard to predict, he added. And, wow, this is going to be difficult for borrowers, particularly young borrowers in certain markets. What you want from your federal regulator, essential to pay attention to a big picture and take action before the crisis happens, Somerville said. Sellers also affected. So what's happening with sellers? Let's tune in here. In Metro Vancouver, realtors say owning a detached home will become even more challenging than it already has. Well, because they're putting in laws into place that should have been put into place since the time of Moses. But anyways, homes that don't have suites or laneway houses, I believe those are going to become a little bit less desirable, Ryan said. Yeah, because you can't rent it out to 50 people. And this guy's smart, too. He knows what he's talking about. People are going to be looking for houses that produce more income, with potentially 1 or 2 suites down below, he added. Ryan says first-time homebuyers will be among the hardest hit. Real estate experts say the demand for the attached homes, like condos and townhouses, will go up. Every time you put in a restriction, it makes it more challenging for people, Ryan said. The new stress test rules won't apply to mortgage renewals as long as they are with the same lender. So that's kind of good news. So if you're with the same lender, the new stress test won't apply to you if your mortgage comes up for renewal. So you're already in. What are they going to do? Say, oh, you don't qualify for the mortgage you already have? Anyways, guys, watch some of my older videos. People are asking me to bring this up, bring up this, a minimum wage, blah, 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 cost of living. Yes, I've mentioned this many times in my video. People were making, I know this is off topic, but people were making more money 3 years ago when you look at the buying power. I did a buying power calculator for you guys to show you how much money in 1981 $1,000 was worth to today's standard and how hard it is to make $1,000 today as opposed to how much it was worth back in the day. You know what I'm saying? So, anyways, I want to know what you guys think. Sorry I'm all over the place today. I made a few videos for you guys today. I just had to wrap up a few things. I did my 6 months in business video numbers. I put up some numbers of my 6 months in business. Let me know what you guys think. Comment below. Don't forget to hit the subscribe button. And thanks for watching.